Hey guys, welcome to Property News Update. I'm Brett Alegre-Wood and today is Friday the 30th of January 2015. So today I'm going to go through a couple of news articles today, but actually there's a lot of stuff in today that you can apply anytime. It's not about the news, it's more about the principles behind it. So we'll kick straight off with the first one. So first of all, stamp duty reforms bring out buyers. And look, this article talks about how the fact that we've had up until now these sections where at 125 or 250 stamp duty kicks in from nothing to 1% or from 1 to 3, and that sort of thing. And what it meant was your property stayed at 250 price or value, if you like, until it got to probably about 270, and then it'd jump all of a sudden. So what you found was if your property was worth about 265 or something, you ended up negotiating 250. That's stopped now. So it's basically graduated change, which actually is a lot better system. Why they didn't do this before, I don't know. But the reality is it's a lot fairer system. It actually means that a lot of people are going to be paying less stamp duty. You're paying a lot more stamp duty at the higher end though. But what it's done is and look, it's saying these are sort of saying that it's bringing out more buyers. I don't think it really is. I think, yes, maybe at those levels, but actually I don't think people are going out because they're going to save $2,000 on stamp duty. If you're buying a house, you've got more considerations. Next article is, to fix or not to fix. Is a 10-year mortgage too long? Now, the interesting thing with this, and forget about the article, so we just want to talk about the principle in this. And the principle really behind this is this. Do you really want to fix something for 10 years? Because remember, you fix it, you're going to have to pay to get out of that if you want to remortgage, if you want to sell, if you want to do all sorts of things like that. So it depends what you're doing. If your plan is just to buy the property and leave it and not do anything with it, and there's no compulsion to buy more. But what I find, and certainly for every single investor that I've ever met, and I say investor as opposed to accidental landlord or someone who doesn't really want to invest, is that they want to do things with it. And 10 years is a long time. So I much prefer to keep my fixed period a lot shorter. And I'm very hesitant to fix. The reason I'm very hesitant to fix is because what I find is oftentimes when I'm fixing, or when I look to fix, that what ends up happening is it's not worthwhile. You've got to basically, what happens is you end up paying more to fix than say the variable. A lot of times you're better to stay on the variable because it works out cheaper, you've got more flexibility and things like that. So it really depends. And the thing with this is you've got to do the sums. If you don't do the sums, then don't do it. But generally I find if you're going to build a portfolio, if you're going to buy multiple properties, don't fix for 10 years. Don't fix for 5 years. 2 years, fine, no problem. But if the market's galloping up, I would tend not to fix even so, because you want the flexibility to be able to do things. You don't want the high exit fees that they often charge. Bank of England chief economist says there's no rush to raise interest rates. And I've been saying for a while, I don't think interest rates will rise until wage growth comes back. Interesting thing, there's lots of articles about deflation. If deflation happens and wages stay the same, that's the same as wages going up, okay? So that could happen. Do I think it is really? No, I don't. Certainly oil prices, they're low. There's lots of different variables, but the reality is I don't think interest rates, I think 2015, we're not going to see interest rates go up. There's no compulsion to, unless there's dramatic changes, which I can't see. I think really everything's refooting itself and it's heading along nicely. The election will put a bit of a blimp in the things, but the reality is I think there's no need to fix your rate. There's no need to worry about interest rates right now. But if you're in a situation where you're having cash flow issues, you need to deal with them now because interest rates inevitably will go up. Do I think they're going to go up to the 17% and things like that? No, I think actually we're going to settle at a lower rate than we were before, okay? Because globally, the westernized economies are actually growing at a much lesser rate, okay? Even China is starting to settle down into a lower rate of growth, okay? London property market, loses steam as it enters the new year. It's like, of course it's going to. It went up tremendously last year, and for the previous years. So why would it keep doing that? And this is one of the key things. People think that because it's risen 40% last year, it'll do it again this year and I should jump in now. No, move out, follow that ripple effect and move to the next place because that's likely to be the 40% growth. And probably not 40% because the fundamentals aren't as there as well. It might be 20%, okay? So that's why now I talk about zone 2 being the new zone, zone 3, 4, 5 being the new zone 2, okay? Because I think that's where you're going to see growth. Commuter belts. We're starting to get back into the UK side of things, the major cities and towns, okay? we're moving back into those. So you're going to see a lot more property from us from those areas, and we're specifically targeting. I'll talk you through the algorithm that I've put together to pick the areas, and really identify the fundamentals. But that'll come in subsequent weeks when I'm ready to launch it. Okay, so I just want to cover this. West Brom wins High Court battle over buy-to-let rates. Basically what they did is they went and sold all these buy-to-let mortgages, and they were supposed to be on a tracker mortgage. But what happened was the contracts that people signed said one thing, but they referred to their standard terms and conditions. Okay? Now, what the bank did is they raised rates, which surprised everyone, and there was 360 investors took them to court. They ended up losing. The investors lost, the bank won, because what happens in that standard terms, which most people, yes, that thick booklet you get when you sign a mortgage and it says all sorts of stuff and you can't read it because it's in all legalese. Well, that's what applied, and the High Court upheld the bank's case, which is a bit of a problem. Now, the only thing I think you can do with West Brom is just boycott them. Don't use them for mortgages, because really, I think banks that do that, effectively what they're doing, they'll feather in their own nest, sort of saying screw you to the investor. And the problem was, through the recession, it wasn't very easy to remortgage. So most of those investors were caught in that actual mortgage. But they lost the case. And, you've got to give it to Mark Alexander, who actually put that case forward from Property 118. Good guy. And he actually, genuinely, I would have hoped that they would have won. But the reality is, the terms and conditions of the contract apply. I just wanted to cover this. Openwork acts as 10 mortgage lenders from a mortgage panel retender. Now, the interesting thing is, most people think when you go to a mortgage broker, okay, you've got access to the whole market. You don't, okay? For instance, if you go to a mortgage broker that sources their mortgages through Openwork, they did have 35, they've now got 25. So that means their whole of market is 25 lenders. So just be careful if you think they're going to go to the whole market. It's much better to do some research yourself. Money Supermarket, speak to a few different brokers, and get the things. What you'll find if you go to an Openwork broker here and an Openwork broker here, they've got the same lenders, okay? Because realistically, normally they can't write other stuff, okay? Because that's all part of their regulation. So just be aware of that. That's key to understand when you're looking for mortgages, because now's the time to start remortgaging. Now's the time to look back and see how you can get that access, that equity out of your properties, and actually start building your portfolio again. The confidence is coming back into the market. Yes, there's people talking about Europe and Brexit and all these sort of things, but the reality is the UK market is back on its feet, and yes, it's not running by any stretch of the imagination, but it is coming back. It will be coming back further, and now's the time to be starting to really look into it and sitting down with a portfolio manager, sitting down with the people you're working with, and working out the best way to take advantage of and ride what will be the next 10, 15, 20 years, who knows, of growth. Okay? Guys, have a great day, and remember, live with passion.